It's time to do business again. This is Business Incorporated, where we'll give you updates from the world of business. And here's what we have prepared for you today. Zambia interest inflation is out and it's eased. In South Africa, after protests, there's a pause on the VAT hike. Egypt is extending its free transit visa program. Good afternoon, everyone. I'm Ini John Mekwa. Let's do business. We start from the global space as usual. Oil prices slipped 2% as sources say that OPEC Plus would consider accelerating its oil output increases in June. But losses were curbed following a report that U.S. President Donald Trump may cut tariffs on Chinese imports. So we see a drop for this afternoon, $1.32 for Brent. That's about $6.12 a barrel. WTI is also down 2.2%, $62.27 a barrel. Global benchmark Brent hit a session high at $68.65. That's the highest since April 4. That was before the announcement by OPEC Plus. Several OPEC Plus members will suggest that the group accelerate oil output increases for a second consecutive month in June, according to those who are talking to them. And there have been recent tensions among OPEC Plus members over compliance with production quotas. Both benchmarks paired their losses in early afternoon trade after Kazakhstan's energy minister issued a statement saying that Kazakhstan, not only OPEC member but an ally in OPEC Plus group, was responsible participant in international energy community, and it was interested in predictability and demand as well as supply balance. The market also saw some support after government data showed that the U.S. crude stockpiles rose unexpectedly last week, while both gasoline and distillate inventories fell more than expected. Connected to Nigeria, the Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edun, says a forensic audit of the Nigerian National Petroleum Company Limited is currently in the pipeline. He made the statement during the Nigerian Investor Forum that was held alongside the ongoing spring meetings of the International Monetary Fund and World Bank in Washington, D.C. The minister emphasized that the forensic audits of the state oil firm is imperative to allow government and the public to really understand what has happened to the company's finances in the past, particularly since the removal of fuel subsidy was announced by President Bola Tinubu. The announcement comes after stakeholders called for a thorough examination of NNPCL's operations following the September 2023 report by the Nigeria Extractive Industries Transparency Initiative of its failure to remit $2 billion in taxes to the federal government before becoming a commercial entity, as well as other issues relating to oil deals transparency. Away from the oil and gas scene, gold prices jumped more than 1% on Thursday on bargain buying, a day after the bullion hit a one-week low amid optimism over the U.S.-China trade deal. So we see it's a reverse of what we had about this time yesterday. 1.5% up. That's what we have for spot gold, but it hasn't gone back to the 3,005, which is the new record high that it had hit. So it's at $3,335.39 per ounce. U.S. gold is also 1.5% in the green, $3,344. Spot silver is on the flip side. It's down more than 0.5%. $33.33, that's $3.33. Platinum is down 0.4% at $968.60 per ounce, and palladium is down almost 1%, that's 0.8%. At $936.63 per ounce. U.S. Treasury Secretary Scott Bessent has said that the excessive high tariff between the U.S. and China are unsustainable and must reduce before trade negotiations can proceed. But President Donald Trump would not unilaterally cut tariffs on Chinese imports. And of course, we are still waiting for response or reaction from China on this. Also, the dollar index fell 0.3%. As we know, relationship between gold and the dollar index is always inverse. Now, let's talk about gold some more. We've seen some very impressive movement. Unfortunately, not for very good reasons. Uncertainty in the global economy around tariff, trade, and all drove investors to the gold scene. But what does all of this mean for sustainability of the price? Can we see gold come back to 3,005? I wonder. Let's have analysts from financial derivatives company Toju Megison. Hi, Toju. Welcome to the program.
Morning, Nini. Thanks for having me.
Great. So we've seen this impressive movement in gold, even though we see it dropping now because there's seems to be stability between China and the U.S. But talking about sustainability of the price, what does it look like from where FDC is?
Nini, a key point you mentioned will be the fact that, again, the inverse relationship between gold and the US dollar. The stronger the US dollar, this suppresses the value for gold, and vice versa. The weaker the US dollar, it drives up the price for gold. Now, we've been recently seeing higher price levels of gold in the past, couple months. I know since mid-November, the percentage increase in the price of gold has gone up by 26%. It's actually the highest it's ever been since 1980. Now, we're backdating to 3 years ago, where I feel this trend started to arise was due to the fact that the US had imposed sanctions in Russia. And these sanctions, obviously, they imposed the sanctions on Russia due to the invasion of Ukraine. And these sanctions created geopolitical issues and uncertainty, leading investors to flock towards gold as a safe haven, because gold is an asset which tends to stay stable in the midst of crisis, actually. Additionally to that, the US actually specifically targeted Russia's gold reserves specifically, in order to hinder Russia from using its gold to fund the war against Ukraine. So ultimately, that had led to I lost my train of thought there. But ultimately, yes, we would see overall we would see the price of gold increase as there is geopolitical issues and uncertainty, as well as the structural demand for gold. Although, however, we could see if US interest rates should rise up and the inflationary rates should drop drastically, then we would see the appeal for gold actually diminish, leading to the reduction in price.
All right. So we've seen, apart from investors taking a hedge where gold is, we've also seen central banks, institutional investors also going that way, especially now with the drop in the dollar index. Sentiments around President Trump hasn't been so great in the last couple of months. Do we see a continuous increase in the demand of gold, from what you've heard?
Most definitely, we would see that central banks are still very much have a strong demand for gold, due to the fact that countries are looking for ways to divert away from the US dollar, to de-dollarize the dollar, actually. And the implications this has would help the... Hello?
I can hear you, so please go ahead.
So the de-dollarization of the dollar, this would help obviously improve the price of and the demand for gold. Again, looking at the forecast and the low forecast for the price of gold, this will encourage buyers to delay their purchase in hopes of anticipating a better entry to buying gold as the prices continue to fall. So yes, there's going to be a retained demand for gold, for sure.
All right, so Jumegasin, analyst with Financial Derivatives Company, thank you so much for your time.
Thank you.
All right, moving away from gold now to the IMF, the International Monetary Fund is advising the federal government of Nigeria to spend wisely after it made difficult reforms to save more. This is as it said that there's an urgent need for fiscal authorities and governments across the world to build buffers. Speaking at the Fiscal Monitor press conference at the ongoing 2025 IMF World Bank spring meetings in Washington, the Director of Fiscal Affairs Department at the IMF, Victor Gasper, said that there's need for government to act urgently and decisively as they face stark trade-offs and painful choices.
Financial markets have partially corrected and financing conditions have tightened. Global public debt is very high and rising. According to the WEO reference projection in 2025, it will rise above 95% of GDP. It is higher and growing faster than pre-pandemic. In a fast-changing and perilous world, ministers of finance must act urgently and decisively. They face stark trade-offs and painful choices. Policymakers should invest their political capital in building confidence and trust. That starts with keeping their own houses in order.
Nigeria managed to do a very difficult reform that was important to deliver fiscal saving. The authorities also scale up targeted transfers. What we think there is what is important to act on two pillars. One, generate additional fiscal saving. We mentioned revenue mobilization to really scale up spending on social protection, spending on investment. However, as I mentioned, many countries they need to spend, and there I want to go back to Vitor's first remarks. What we recommend countries is to spend very wisely. So strengthen prioritization in terms of spending, strengthening the efficiency of spending is important.
And that was part of our conversation during Business Morning earlier today, where I spoke to the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rewani, about some of those tough decisions and choices that Nigerians may have to face following the advice of the IMF.
What was appropriate and what was adequate in 2023 may not be appropriate and adequate in 2025. So the fact that we removed subsidies in 2023 or reduced subsidies in 2023 allowed for an alignment of our exchange rate does not mean that you do nothing else. It is those things were necessary but not sufficient. What makes it sufficient is what we are looking at in the future. Today, is IMF in the Article 4 review is projecting that our inflation rate, based on the new methodology and new basket, is going to increase to 30% this year, and it's going to increase to 37% next year. That calls for us to pause and take a look at what we're doing. What are the factors that cause inflation, and why should we be looking at it to dealing with it immediately? One, the price of oil. Today, the price of oil, you just said it, is $66 a barrel, and OPEC is threatening to increase their production. If you take $66 a barrel, at a time when the dollar has fallen by almost 12% against the basket of currencies, the effective price of oil you're getting is actually about $54 a barrel, because you have to discount that.
Now, the federal government plans to raise about 1.2 trillion naira from the domestic bond market in the second quarter of 2025. According to the FGN bond issuance calendar for the second quarter released by the Debt Management Office, the amount would mark a significant reduction from the 1.8 trillion naira targeted in the first quarter of the year. The reduced target comes as the government faces a tough fiscal environment driven by weak oil receipts, elevated inflation, and a record 13.08 trillion naira budget deficit. According to the calendar, 3 auctions will be held on April 28th, May 26th, and June 23rd, with 2 bonds to be offered per month. The DMO also mentions that it plans to raise between 300 and 400 billion naira at each auction, combining reopened bonds and new issuances. The Securities and Exchange Commission is asking Nigerians to report any suspected illegal investment scheme to the Commission for proper investigation and necessary action. The Commission said this in a notice issued to investing public, warning that Ponzi investment schemes pose great danger to the growth of the capital market. The warning is coming a few days after CIBEX, a digital investment platform described by the Securities and Exchange Commission as unregistered to operate any such service, offered investors 100% profit after 30 days of purported trading. No fewer than 600,000 Nigerians who reportedly invested in the scheme were caught in the web and lost a staggering 1.3 trillion naira after the Ponzi scheme collapsed recently. In its latest advisory, the Commission warned the public about the growing threats and risks posed by Ponzi schemes, illegal investment operations, and unregistered digital assets platforms. It explains that fraudulent entities and individuals have continued to exploit unsuspecting investors through deceptive promises of high returns, often leveraging the allure of digital assets to create an erroneous perception of legitimacy. And today we had a continuation of that conversation that we started yesterday. But first, the National Pension Commission, PENCOM, says that it has recovered a total of 1.58 billion naira from defaulting employees through enhanced enforcement efforts. The Director General of PENCOM, Ms. Omolola Oloworanran, gave this information at an event in Kano, where she also mentioned that state remittances have also improved following the improved adoption of contributory pension scheme. She adds that the Commission has introduced a flexible adoption model, allowing states to begin implementation with new employees or those with fewer than 10 years of service. Ms. Oloworanran notes that as at February this year, total pension assets under the management had surpassed 23 trillion naira level following an improvement in remittances. The raw material bill is still generating reactions as stakeholders raise fears that it could restrict manufacturers from importing or exporting essential raw materials and impose barriers on export. However, developmental economist Professor Kenife says, who was a guest on Business Morning today, has his own perspective and shares the gains if the bill is passed.
This bill does not say ban anything. So we shouldn't mention that word ban. It just says progressive value addition. And let me tell you something. You know, I'm from ECOWAS Commission. This bill hasn't said anything different from what we have done in ECOWAS. In ECOWAS, we have free movement of goods and services, and that treaty allows any raw material in Nigeria to be shared across West Africa because we are a single trade-free zone. But when you come to value addition, it says you must have 30% value addition before goods that are going to process goods be recognized as being compliant, and then you can move. And we have methodologies for dealing with this. You have to register that product, and then they have to determine from the registration that you meet that value addition of 30%, and then you are recognized. But when you have it as a law, first of all, you have phased implementation of law. You could say, okay, over the next 5 years, over the next period. And don't forget that this law will still take into effect and will still recognize our commitments to ECOWAS, which is a treaty commitment. It will still recognize our commitment to Africa Continental Free Trade. These are all commitments. So the law will still recognize them and work through them as we are facing things. So it's not, law doesn't stop and then you can change law anytime. You have an act. There's an act to amend an act. Is it not what happens? You have the Finance Act year by year that continues to amend the act and then smoothen the rough edges. And you have to have a law so that everybody takes you seriously.
And now let's head to the market and see what intraday numbers are looking like this afternoon. We had good one for the NGX yesterday. I wonder if that has been sustained, Anite.
Yes. Good afternoon, Nini. Yes, you're quite right. Yesterday, you were on the stock market, and as a matter of fact, in the last 2 days, where we've seen about, guess what? We've seen more than 600 billion naira being added in value to the total valuation of the all-share index and the market cap.
Congratulations.
Okay, so, exactly. Congratulations to those who are investing and those who are yet to invest. So now, Nigeria's stock market, it's been able to, so far, the month of April is gradually winding down. We have just about 4 trading sessions left. That's after tomorrow. Then we're going to have about just 3 trading sessions next week before the May 1st holiday, and then the month of April is over. But so far, month to date, has increased to about plus 2.3%, while the losses that was recorded in the month in the early weeks of April has been reduced to about just about some 0.4% by approximation. But so far, the likes of Zenith Bank, we also saw the likes of UBA, First Holdco making their imprints on the market, and actually the market had about 35 gainers in contrast to 18 losers, and there you see the market coming still deeper into the 105,000 index point and still climbing higher in the midst of some companies releasing either the full year 2024 earnings or the first quarter 2025 earnings, which we'll be getting some details from a market analyst who will be talking to us in a couple of minutes from now. For the Johannesburg Stock Exchange, 0.32%, 90,137.19 for that index, and it's still climbing. That's for Nigeria's the other Nigeria's major. I won't really call it a rival. I'll call it actually a contemporary, because it's on the African continent. So we also see the brother bourses being in the green. So it's no rivalry. Actually, it's just a compliment for us to be on the same side. Now let's take a look at the other side of the market. EGX and the Nairobi Stock Exchange also in the green, 2.58%. That's for the Egyptian Stock Exchange. And still speaking of Egyptian Stock Exchange, recently we just had it just about less than 2 days ago that the International Monetary Fund has lifted Egypt's growth outlook, although it didn't give the explanation for the improved growth outlook. It says that it upgraded its economic growth expectations for the country over the next 2 years, although it trimmed the outlook for other countries within the Middle East and the Northern Africa region, that's the MENA region. So in its latest world economic outlook, Egypt's real GDP is forecast to go upwards to around 0.2%, both for this year and for the previous year. And now the growth is expected to grow by 2.4%, up from the one recorded in 2024 to about 3.8% in 2025 and 4.3% in 2026. So part of the reason why this market is climbing higher. While for the close of Wednesday's trading session, we see that the Nairobi Stock Exchange All-Share Index, that's for Kenya, was up by, well, moderately by 0.12%, 126.18. So that's it for the markets on the African continent. So let's go deeper into what I was saying earlier about Nigeria's stock market. Well, we saw just about almost about 2 days ago, we saw First Holdco presenting its full year 2024 earnings results, which came in quite impressive. And the board has also proposed a dividend of 60 kobo per share for that banking giant, bank or financial services giant. And not too long after that, we also had UBA releasing their results. But then at the same time, we just have just a couple of minutes ago that other companies have also released their results. So now to give us details into how investors are reacting, because they've reacted to this previous numbers, but how is the latest earnings, how is it affecting the market, investors there? So we bring in Peter Abe, equity trader with Stanbic IBTC Stockbrokers, to give us details about that. Thank you for joining us, Dr. Peter.
Good afternoon. Thanks for having me.
Okay, so, now you're currently trading at the moment. Can you give us details? What are the reactions to these market numbers? I've just talked about the two banking bellwethers, but what about the other earnings from the likes of Lafarge and other companies listed on the NGX?
All right, you mentioned earlier that we saw First Holdco 2024 numbers, and also Q1 for UBA, as well as for MB last week. This morning, we had seen WAPCO release their Q1 2025 numbers. These are quite good numbers, and I must say, WAPCO currently is on full beat. We expect most of these numbers, having had some negative run last year, we expect them to have overcome most of these Forex challenges, which we have seen FX stabilize. So we expect more of the positive sentiment into these numbers. But if I may just note that most of the numbers went ex-div last week, and few more went ex-div this week. So we expect that investors will have more money in their hand, and that means that there will be likely more dividend reinvestments in the activities on the NGX.
Okay, so now talking about the numbers, and we've seen that the market, it was a holiday shortened week last week, another holiday shortened week this week, and it's going to be another holiday shortened week next week. But so far, the month of April has been, the market has been making some rebound. What is really driving this recovery in the markets?
Yeah, like you said, most of these quarterly numbers, first quarter numbers, are being released. And the expectation is just that we'll be seeing more positive numbers. I mean, I just mentioned WAPCO released their quarter one numbers, which was quite good. Revenue up 8% to 248 billion, and profit for the period was up to 48 billion, which was about more than 800% in terms of increase. year-on-year. So you will see most of these numbers helping the markets. And if you don't forget, the FX had FX last year, but that story is changing. Like Nigerian raised capital, which also helped them to overcome with their loans interest. So I think going forward, we'll see a stabilized income for most of companies, and to definitely help to drive activity of sentiment in markets.
Okay, so Dr. Peter, that takes me to my final question with you. We have just about an hour before the market, the domestic bourse closes, and I'm sure this green number, this green color will be sustained. But what are we to expect from tomorrow and the remaining 3 days, or let's make it 4 trading days remaining for next week?
Yeah, the market has gained 0.46 so far today, which tells us that we are seeing positive sentiment, and we expect that to continue. Just also to mention, like we saw some few positive sentiments in the likes of MTN. So we feel that most of these numbers will continue to see positive sentiment going into the end. I mean, we just have 1 day today, and also more of the numbers will be released. I think they have next week to release their quarter one numbers, just like a deadline. So we expect that to drive activities going forward today and next week.
All right, I just can't wait to see all of this come into play, especially the first quarter, which other equities, other stock markets around the world have been releasing first quarter results. So thank you so much for that analysis and information, Dr. Peter. Okay, so that was Dr. Peter Abe, equity trader with Stanbic IBTC Stockbrokers. Now let's move from Africa and go straight away into the Middle East. Middle East stocks, it's actually high spirits for the Dubai and the Abu Dhabi, the two bourses within the United Arab Emirates. We see here 0.11% for the Dubai and the 0.88% imprint from the Abu Dhabi index. And this is within this region, within the GCC regions. We had it yesterday, but let's mention it here, that the US President Donald Trump will be making one of his second visits so far overseas to the GCC countries. That's between Qatar, Saudi Arabia, and the United Arab Emirates. So it's going to be a three-day visit there between May the 13th and the 16th. So Now, this will be as part of, we're still counting down to that 100 days in office, just about sometime next week. That will be the first 100 days in office, which is actually a benchmark for evaluating a president's early performance, and a tradition which has gained prominence since one of the U.S. presidents, that's the 32nd president of the United States, Franklin D. Roosevelt, his presidency. So that's a period where presidents often aim to push for their key policy initiatives. So U.S. President Donald Trump, of course, who has been rattling the world with his tariffs announcements, at some point we see some negotiations, and even him trying to say, okay, there's room for negotiations in between some of the biggest economies. So that has made an imprint on the markets there. Now, for the Saudi Arabia's Tadawul, we see 0.74%, and this is coming as Saudi Arabia has announced a new Airbus deal, a plan to buy some fleets of Airbus planes, numbering about 20 to the fleet of its carrier. So that also is also rubbing on the market. The Qatar Stock Exchange All-Share Index is also up 0.23%. So far, the markets across the GCC region or the Middle East in the green at intraday and poised for a positive close for Thursday's trading session, which will be their last trading session within the week before they resume on Sunday. Now, let's fly next to the United States. We had mentioned about the president, but this time, it's not too good for the United States stock markets. The stock futures in the red. Overnight, the three major averages had closed higher on hopes that U.S. and China trade tension could ease. Donald Trump had already signaled that he does not plan to remove Federal Reserve Chairman Jerome Powell from his post, which is supposed to end sometime in May 2026. But then he has said he's not doing that. But the reason why the markets are in the red is because China has said that there's no ongoing bilateral trade talks with the United States. So that has dented the expectations of investors there. So no ongoing trade negotiations between the two biggest economies that's in between the United States and China. Which of them is your biggest? I don't know. Some say it's China, some say it's the United States, but time will tell which is the bigger of the two. And for the stock markets across the Asian region, it's a mixed close there for markets across the Asian region. The Nikkei has been able to make some rebound. Yesterday we saw it going down to about 34,000 index level, but the Nikkei 225, which is for the top 225 stocks listed in Japan's stock market. We also have the topics there, but the benchmark Nikkei 225 index was in the green, almost 0.5%. South Korea's Kospi was down by 0.13%, and this is coming after the country there. There was some information that the GDP had contracted by 0.1% in the first quarter of this year, and that's according to advanced figures released Thursday morning, and that missed the 0.1% rise expected by a poll conducted by Reuters. So for the Shanghai, we see it in the green, 0.03%, while Nifty 50, that's for India's stock market, it was down by more than 0.5%, 0.34% to close Thursday, 24,246.70. So the market's kind of a mixed bag, but I think the greens have it if I count it properly.
All right, thank you so much.
Pleasure.
Now we move to Berlin, where the European Commission, I'm sure you saw that story yesterday, they fined two of U.S. tech giants hundreds of millions for violating one of the EU's key laws. The Commission had investigated Apple and Meta for years and is now moving on with a process that has huge economic but also a lot of political impact, especially at a time like this. Lars Holter is there, closer to the subject matter, to give us details. Hi, Lars. You know, a lot of people will say this is too coincidental. Europe fining U.S. tech companies at a time like this.
Well, is it coincidental or not? I mean, that's a whole debate, of course, Ini, but let me tell you a little bit about what happened here, and let me give you some numbers, because the fines we're talking about, actually, they're not exactly impressive fines, even by European standards. They're not even close to what the future might bring. That's when it's going to get interesting. Apple has been fined 500 million euros, Meta 200 million, all of repeatedly violating the EU's Digital Markets Act. Now, this regulates large online platforms operating here in the bloc. Now, as a matter of fact, those fines could have been a lot higher, because the Digital Markets Act, it allows for fines up to 10% of a company's global revenue. So in future, we're talking billions that could be on the line in theory. But back to reality, let's look at what happened so we understand this a little bit better. Apple has been fined for preventing app makers from pointing users to cheaper options outside its app store, and Meta has been fined because it forced Facebook and Instagram users to choose between opening up their entire data to whatever Meta really wants to do with it, and to seeing ads or paying for their service to avoid all that. Now, maybe as a bit of background, I should explain the idea, of course, of the Digital Markets Act. It's been on the books for years, and it's essentially a set of do's and don'ts designed to give consumers and businesses more choice and prevent big tech gatekeepers from cornering the digital marketplace. The idea being that a handful of companies should not dominate the online marketplace to a point where smaller companies can't even enter to compete.
So what do you think this would do politically?
Well, that is really the big question, Ine. Of course, I'm afraid this will not please Donald Trump. And of course, we initially got a reaction this morning already, where the Trump administration calls this extortion. And so they are apparently really angry about this step, but so much was to be expected. Now, this all comes, of course, after the whole tariffs game that we've been all witnessing in those last couple of weeks now. The EU not letting U.S. companies get away with unfair business practices any longer. It's just a point that's been debated here for so long. Ironically, actually, this comes now from Brussels at a time when these companies are also looked at in Washington, including by the Trump administration. Meta, for example, right now in the spotlight, where the Trump administration is looking into forcing Facebook to divest from WhatsApp and or Instagram. So these near unlimited powers that the companies have in the online marketplace are apparent to Washington as well. Anyway, now as for the EU, they've long been thinking about when to get serious about fining companies, and they've waited until most of the tariff spat that we've just seen got out of the way. Brussels was unsure about the timing here, debating on and off here when to really come out with it. But now, right now, we're having that situation that the EU apparently wants to make a deal with Trump over trade. However, the EU Commission also says that the Digital Markets Act is not going to be part of any deal, that it is not subject to haggling. This law is important to the Commission, and they're making their position very clear on how the online business game is supposed to be played in the EU by companies from here as well as abroad.
Well, it looks like there'll never be a good time to take the hard decisions. So in the face of everything, the decision has to be made. And then we'll wait for what happens afterwards. But let's turn our attention to the market. What are investors focusing on?
Yeah, we're back to the volatility that we've seen over the past few weeks, pretty much starting with the Trump trade chaos. And since yesterday was a really good day for German markets and others, of course, as well, today we're seeing some weakness again. And this kind of volatility seems to really be built into the system. There is just not much confidence in markets. And after we got some relief yesterday on Trump's more modest language on many critical topics, today people are wondering, does this really justify these strong gains that we've seen? So right now, the DAX is down, even though it's just a fraction. One company to look at today, get us a little bit into a positive territory here is Adidas, strongly performing today, up about 2.5%, because they had some really great numbers out for the first quarter. But Adidas is also caught right in the middle of this trade debacle, with lots of their product, of course, made in Asia, sold in the United States and other places around the world. So for them, like many others, it is really hard to predict what the next quarters will bring.
Yeah, I don't think marketers or investors are sleeping these days, waiting and watching. But thank you so much, Lars.
Thank you, Ini.
Let's come back to Africa, where Zambia's annual inflation flatlined in April on a softer rise in food costs, providing room for the central bank to pause interest rate increases next month. Consumer prices rose 16.5% this month, the same as in March. Acting Statistician General Sheila Mudenda told this to reporters in Lusaka, the capital of the country. Last month, data indicated that Zambia's economy outperformed expectations last year, surpassing growth forecasts from both the government and the International Monetary Fund, and it was driven by a sharp rise in fourth quarter output. According to preliminary data, the country's gross domestic product expanded by 4% in 2023. That's down from 5.4% last year. According to Ms. Mudenda, she also made this known to reporters. And just 2 days ago, we told you about the protests in South Africa on the intention of the government to increase the value-added tax. Well, that was supposed to begin from May 1, but that has been suspended, according to the Finance Ministry, after that proposed hike faced opposition from political parties and caused friction within the coalition government. The National Treasury had planned to raise VAT by 1 percentage point spread over 2 years as part of revenue measures for the 2025 national budget. VAT will be maintained at 15%. The ministry has shared this in a statement, adding that Finance Minister will introduce a revised version of the Appropriation Bill and Division of Revenue Bill within the next few weeks. Finance Ministry said while some suggestions were worthwhile, they would not provide an immediate avenue for further revenue in the short term to replace a VAT increase. And still in South Africa, MAN Truck and Bus South Africa, they've announced a more than 48 million rands investment in green technology and skills development, which will make it the first automotive company to manufacture electric buses in the country and also in the region, the Southern African Development Community region. The German company will produce the buses in South Africa as its first ever carbon dioxide neutral production facility. It aims to achieve this goal across its global operations by 2030. MAN SA has so far invested 48 million rand in upgrading facilities at the Pinetown plant and its Oliphant plant in Gauteng in preparation for the manufacture of electric buses. And they said the company is training 60 to 80 apprentices a year at the plants. Egypt has extended its transit visa program, which allows holders to stay in the country for 96 hours for an additional year in an effort to encourage inbound tourism. According to a government statement, the cabinet approved the extension of the 96-hour free transit visa for an additional year, ending in April 2026 with the current regulations. The government explained that this approval comes within the framework of the Ministry of Tourism and Antiquities effort to expand the scope of granted facilities, contributing to attracting more inbound tourism from various markets. Kenya is considering the issuance of bonds in Hong Kong as part of financing model diversification for its mega infrastructure project. The move comes at a time the country faces challenges in extra borrowing because of high debt levels. Over the last 15 years, Kenya's government debt has risen sharply. In 2010, the debt was a manageable 39% of the country's GDP, but by March 2023, it shot to 68%. The target is to bring it down to 52.8% by 2027-2028 financial year, which would align with sustainable levels recommended by the International Monetary Fund as well as the World Bank. Still in Kenya, is set to overtake Ethiopia as East Africa's leading economy this year, 2025, marking a major regional power shift. This is according to latest forecast by the International Monetary Fund. Kenya's GDP is projected to rise to $132 billion. That's about 17 trillion Kenyan shilling, up from $121 billion. That's 15.6 trillion shilling in 2024. And that's in contrast to Ethiopia's economy, which is expected to shrink to $117 billion, a sharp decline from $143 billion last year. The turnaround comes after Ethiopia implemented sweeping reforms to liberalize its currency, a move that saw the Ethiopian birr lose over 55% of its value against the dollar. The Kenyan shilling was the world's best performing currency last year, 2024, appreciating by nearly 21% against the dollar. And the country also successfully floated $1.5 billion Eurobond in February, boosting investor confidence and foreign reserves. The Tanzanian mining sector has attained a historic achievement by contributing 10.1% to the national GDP in 2024, 1 year ahead of the target outlined in 2009 mineral policy and the National 5-Year Development Plan that's supposed to run from 2021-2022 to 2025-2026. According to the Minister for Minerals, Mr. Anthony Mavunde, the sector's performance to the strategic leadership and directives of the government under the President, whose sixth-phase government spearheaded comprehensive reforms that are aimed at transforming the extractive industry. These include enhanced revenue collection mechanisms, the introduction of gemstone auctions, tighter control of mineral smuggling, and the establishment of mineral markets and buying centers across the country. And in Zimbabwe, the Investment and Development Agency, ZIDA, is promoting 3 transformative agricultural ventures aimed at revitalizing rural economies, enhancing food security, and attracting fresh capital into the country's farming value chains. The projects span beef and dairy farming, agro-processing, and crop diversification, and are expected to stimulate job creation and value addition across multiple provinces. Financial projections include revenue of about $6 million US, that's a 40% gross profit margin, 25% net profit margin, 14% annual return on investment, and a $3.5 million net present value. The project has a 4-year payback period. Let's head to the crypto space now and see what's happening. I remember this time yesterday we had a green board and we're celebrating that, but did we celebrate too soon? Well, I think looking at the numbers, we're still within that area. So we see Bitcoin at $92,709.99. In 24 hours, it's lost more than 1%. So it's a reverse of the color here, even though the numbers are still looking encouraging compared to what we've had in the last few weeks. Ethereum is 1,075, XRP, and all of that. But so some news also in the crypto space. For instance, Trump crypto yesterday, the price of Donald Trump's cryptocurrency soared after the president promised to host 2 special events for its top investors. And the website for Trump meme coin says its 220 biggest holders will be invited to a private gala dinner with the president. That's supposed to happen May 22, and they describe it as most exclusive invitation in the world. Now, according to crypto trading platform Coinbase, Trump jumped by 70%. So, I mean, for some investors who lost out, you know, at that early days of the Trump coin, were you able to get in and make some of your profit or recover some of that, I wonder? So that's it. Trump crypto soars as the president offers dinner to top holders. I wonder what conversations will be going on there. Well, I guess I just have to be patient with time. Yeah, we will hear about what they discuss there. Then there's also the other story. Bitcoin is decoupling from the U.S. stock market and starting to trade more like precious metals in another signal of Bitcoin's growing role as a safe haven asset against global economic disruption. Did we really see Bitcoin act as a hedge this time? Maybe next time. I think we also have another one. Bitcoin acting less NASDAQ, more like gold. And then NVIDIA excludes crypto companies from Inception program. NVIDIA has clarified that cryptocurrency-related companies are not eligible for its Inception Accelerator program. The program is open to startups founded within the last 10 years, but consulting firms, cloud service providers, distributors, and public-listed companies are excluded. Let's talk to Gilbert now and find out what he thinks about all of this. Hi, Gilbert. Good afternoon and welcome to the program.
Yeah, greetings, Mrs. Cindy. Great to be here.
Yes, I don't think you're one of those meme coin fans, but I mean, I think some people recovered a bit of their funds when Trump coin recovered a bit yesterday.
Well, you know, meme is part of the game in the cryptocurrency market, but I have an investment strategy that does not allow me go fully in crypto because, you know, meme promises very high returns. But the thing is that, you know, the higher the returns, also the higher the risks. And while some more traditional investors try to stay away from meme, I think that the kind of returns meme promises, it's not much of a smart thing to stay away from meme. So what personally I do is that I have 2% of my portfolio which I only allocate to meme. And I do it this way so that in case it go as planned, you know, then I have, you know, a very, very satisfactory return. But then if it does not go as planned, I know that, okay, that was a particular amount of money I did put for my fund bucket. So the strategy I apply is I have a percentage of my portfolio that is meant for fund. It's in my fund bucket list and not a core part of my portfolio. That has always been my approach to meme.
Yeah, so trying to eat your cake and have it, that's what you're trying to do, Gilbert. But I mean, this is a Bitcoin decoupling, you know, from stocks and being seen as a risk asset or as an edge at a time like this when we know that investors are looking for where to hide from all of the uncertainty. How do you see this?
Okay, so Bitcoin has always been seen as a risk-on asset, and this is because of how it has always moved. You know, it moved alongside with stock. But it's a good thing to see decoupling, and this is actually something that investors has looked forward to. You know, even earlier this month, it was trading alongside with the S&P 500, but it's moving differently now. Even when stock is going down, it happens to still be going up and even outperforming the S&P 500 and Nasdaq right now. Though it hasn't caught up yet with gold, which is the leading safe haven asset. But this means one thing: it means that investors are beginning beginning to see Bitcoin as a safe haven, probably obviously even due to the trade, Fed's independence, and personally, I think exhaustion of investors. Investors want to get back into risks, but they don't want risks that are tied to earning. And if you look as well, we have a president that loves Bitcoin. He's a Bitcoiner, and regulation is becoming more clear. And I think this is what's happening, and Bitcoin is growing, and investors are beginning to see Bitcoin as something that holds value and not just something that they could trade alongside with the trend, depending on how macroeconomics is going.
Yeah, Gilbert. Well, I'll let you go now, but please, I need to talk to you after the program. So you tell me how to get the invite to that Donald Trump's very tight
the party.
I want to go to that dinner, so please. Well, thank you so much for being a part of the program.
Yeah, thanks for having me.
All right, so that's it. Please, if you know how to get into that dinner next month with President Donald Trump, share with me. I want to be there. I want to hear the conversations. So that's it on the program. Thank you so much for being a part of Business Incorporated. I'll see you tonight for the stock market report, and then 10 a.m. tomorrow. I'll be here. God's grace. Bye-bye.